Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Are junior gold stocks on the verge of lighting the blue touch paper? I am Paul Harris for Kitco Mining at the 2024 Precious Metals Summit in Beaver Creek, Colorado. To help me answer this question is Michael Gray, partner at Agentis. Michael, welcome back to Kitco.
Pleasure to be here, Paul. Great to see you.
Likewise, we're on the first day of the event. You've just come fresh from a panel discussing your likes and dislikes of the junior mining space and giving some key pointers to investors about what to look for, red flags, green flags, things of that nature. What are some of your golden rules?
Well, one thing I presented in this panel session, and I was asked to focus on exploration, was how do you filter for quality? And the key thing I've been using, say in the last 3 years, is grams times meters intercepts. If they're over 100, they're very notable. It's an easy thing for investors to calculate. And so we track that very carefully in terms of the top, say 16 stocks over the last 12 months and how they benchmark. We cover about 5 of them. And they tend to outperform if they can consistently deliver these plus 100 gram meter intercepts. And if they start hitting 300 or 400 gram meter intercepts, like the snow lines of the world, then they're going to do exceptionally well. So that was a core filtering message as part of the presentation for me.
So 100 gram meters, that's basically 10 meters at 50 grams per ton is 500
yeah.
gram meters.
10 meters of 10 grams, 100. So the senior mining companies look at this too for the pedigree of the targets and assets. So if it's the right model and you're starting to deliver those type of intercepts, and we don't track any infill, it's all expansionary, then, and we try and avoid grade spreading where we can, that can be a good proxy for a good deposit to be paying attention to and maybe rapidly covering. Because one slide we showed was the outperformance from a discovery hole onward for the first year, almost 400%. I think we had 12 stocks that we showed the trajectory if we benchmark them all from day one of discovery going forward. That first year is critical for these outside returns.
And from your studies, what are some of the jurisdictions where you're seeing most of those 100 gram meter intercepts?
We had a slide on that too, and you know, the Yukon Tintina Gold Belt is number 1, 2 with the Guyana Shield. And so obviously there's a lot of intercepts like that from Snowline, but also Sitka. I think there's a few from Banyan. And then down to the Guyana Shield, certainly Founders Reunion, a number of the juniors that are enticing the senior mining companies with potential scale of assets. And we're seeing M&A start, certainly the Guyana Shield. So other belts, Golden Triangle continues to yield these type of results. And there's been a $4.5 billion worth of M&A. We've talked about that before, since about 2018. And so again, the right deposits with the right continuity and legs that generally are in the tier 1 bucket attracting attention. And then from there, other belts around the world. We're kind of particularly interested in Finland right now too.
Okay, there was an interesting part of the panel when you and the other panelists were talking about the technical reports and the studies that companies issue. A lot of people are intimidated by that, don't feel they can access that. But on the panel, you talked about some of the things that are relatively easy to search for and get educated about. What for you are some of the key things there?
Well, on the if we're talking about developers, I think benchmarking reality are the costs and the estimates comparable with the jurisdiction averages to build a mine or the operating costs. That's fairly straightforward for analysts at least. They are intimidating and they are often stale dated. But you know, we'll put fat on the numbers and do our best to make a good estimate, because the best way to value a project is really a discounted cash flow. But it's tough for investors because I try to emphasize the key is really getting on the ground to seeing the risks, seeing the potential upside associated with these assets. And so one of my core messages was site visits. We don't, as analysts, have any access to non-public information, but as geologists, if that's your skill set, have great insights, I would argue, in the core shack and seeing the drill core and the outcrops to understand whether you are looking at something with a footprint that's tier 1 that seniors are going to want. And if it's yielding good intercepts, put them in context and not just see the highlights, but see some of the context, maybe some of the non-highlights. You also access super smart people are attracted to super good ore bodies, and you learn from them as an analyst.
I've definitely seen that on site visits I've been on. You really get a feel for the bench strength of the team, how excited they are about what they're doing and the project they're working on and the organization they're working within. Now, you've also mentioned another factor that really resonates with me. You said that most companies do not communicate well or do not market well. I see that a lot. I do a lot of management meetings. What should they be doing better?
I think planning ahead and making that meeting, I think we touched on it briefly in our panel, but practicing and focusing on resonating at a very high level on your messages, your core messages. Not everyone can present really well, but most people can articulate their strategy and their key success factors. And very few companies articulate their key success factors at the very end. So you want to build momentum. For me, I like to understand the asset. I'll understand management and capital structure as well throughout it. But I want to see conviction. I want to see strategy going forward and the ability to execute. And that's the messaging from probably the CEO and the IR department. Get in the field and on the ground, and you want to see the right culture of discovery. But usually in the meetings, you're not talking to the ore finder. You're usually talking to the main communicator of the company. And I would argue probably only 1 in 20 is superior at that skill set, marketing.
We chatted a bit about this before we started filming, that very few CEOs seem to be excited about their projects, excited about what they're doing. And I've always had the point of view, if you're not excited about what you're doing, how can you excite an investor to write you a check?
Absolutely. At $2,500 gold, it should be exciting. I think there's a little bit of sector being the explorers in particular that haven't had torquey drill results and sharp price action in the market are feeling a bit beaten down because a lot of doors are closed to financing. Last October at a lunch, investor lunch, we had in Vancouver with 18 investors, it happened to be featuring Snowline. Peter Brown noticed that sentiment on some level and said, I'm a kid in a candy store here. There's all sorts of opportunity. And he was right. There are good discoveries being made, and the returns since that October lunch are fantastic amongst the producers and select explorers. So I agree with you. The excitement needs to come back in presentations for companies to raise capital at lowest cost of capital as possible.
I want to tack something onto the end of that, Michael. It was here about 2 or 3 years ago. I was speaking to a buy-side analyst, and he said to me that I think it was something like in 80 or 90% of the meetings he has with companies, 80 to 9% of them don't ask for a check at the end of the meeting or don't ask, what will it take for you to write me a check?
It's really interesting point. I think one of the only individuals that would do that at the end of every single meeting was Mark O'Day, who had tremendous success at Frontier. And from an early time, it was, I'd like you to be a shareholder, or what can I do to create an opportunity for you, or ask for the deal. And so I rarely hear that. And it, it's maybe partly the market we're in, but even the more frothy bull market, very few CEOs are willing to take that step and look the investor in the eye and say, I want you to be a shareholder.
I would have thought that given pretty much all the companies say it's very hard to raise money at the moment, that would be the first question they ask as and when they get the chance to.
I would too. And I know how hard it is to be managing a company, having co-founded one. And the CEO job is tough. Shareholders raising capital, HR, executing on strategy. Maybe if they're technical, as geologists, they're also very involved in the technical aspects. And I think there's an overwhelming weight, if they're doing the job really well, that they're holding up. So when they do get to the marketing, maybe there's a little bit of a blind spot that, you've got to be absolutely on your game. This is a rare 1 hour meeting or half an hour meeting with the investor that maybe a new investor that needs needs that catalyst of a very, very good presentation and pitch and differentiation and trust in a very short period of time to get that financing.
Okay, let's change tack, Michael. We have a very big catalyst at the moment. Gold is at $2,500 per ounce or thereabout. Some gold stocks are up more than 100% year to date. But I guess the crucial question for many of the delegates here is, are junior stocks on the verge of a rebound or a breakout?
Well, it's going to be asymmetric. There's going to be the haves and the have-nots. I think the ones that have, I like to call them torquey drill results that lead to a lot of share price action, the leaders in the market, the Snowlines, the Founders, to name two, the Vizsla Silvers, those ones are going to get attention and catch traction. It's the broader sentiment. Will we see that pick up? And I think you almost need a sponsor in this market to ensure that you can be carried on for a few years, whether it be the Lundin Group or a high net worth individual like Rob McEwen or Michael Gentili, Pierre Lassonde, to support that company, or maybe it's a big fund. If a blue chip fund comes in with a large check, investors get a little bit more confidence. There's going to be ongoing funding because a lot of these opportunities could be on the threshold of something quite special, but it might be a couple of drill programs away. So I think it's going to be the haves and have-nots, as it often has been. But I do see that C rising because we've already seen the single asset producers outperform all the other producers year to date at 44%. We've seen the developers catch fire with the M&A we've seen recently. I think Skeena was up 23% on the day of the Windfall, Cisco Windfall Goldfields announcement. So we're seeing that, and you would expect that cascading of capital to come down to the best of breed explorers and then further down. As long as, good management teams and good plans, and so I'm optimistic, but guarded at the same time.
Okay, let me put a slightly different spin on that question. A share price being up 50 to 100% sounds a lot for a gold stock, but we have to remember that many stocks fell 70 to 80% in the past couple of years. So how much higher could share prices go, do you think?
Well, when you look at historic priced multiples, I think a lot of the developers are trading at that 0.5, 0.6. And it was mentioned in the session that in a bull market, one that was maybe a little bit too exuberant, some of the developers are trading at 1 times. So there's a gap there to be filled on some level. But it's interesting right now. If you think about the Lassonde curve, and Michael Gentili mentioned this on an interview recently, he coined the term the Lassonde-Gentili curve. And so you've got the classic Lassonde curve of value creation, but also on the y-axis, there's a valuation aspect. Partly commodities are going to change the price to NAVs, but also the sentiment. The sentiment's on the deck right now. I think you would agree, for the explorers in particular. So if that sentiment goes, and it's an opportunity for investors, for quality plays, for large returns, if there's success. So given it's down there, it's an opportunity. And I think we are seeing this gradual rise. The other thing I would offer is with the velocity of strategic investments at an all-time high, we're an order of magnitude more strategic investments, capital coming to the market versus 2020. 2020 was about 50 million, we're up to 500 million. We're surpassing last year's amount. So there's more players wanting to come in and support the juniors with greenfield exploration, including B2 Gold for the last 2 years, Eldorado, Kinross, Anglo Gold, Centerra. So this is a broad list beyond, Teck and Agnico Eagle, 2 of the real staples for the Barrick as well, coming in at Hercules. So I think there's a pent-up demand, but I think it's also on some levels, it's a healthy market that is going to, you're going to have to perform to survive and thrive.
Okay. Now, you mentioned M&A. We've seen some big ticket action recently. You mentioned Goldfields and Cisco Mining. Today, we've heard AngloGold Ashanti is going to buy Centamin, I think $1.9 billion, that deal. Will this cycle see more billion-dollar deals?
If the assets are tier one ilk, absolutely. And what I mean by that are the things that the senior mining companies covet or scale. So 300,000 ounces per year or more production gold equivalent. Those are tier one assets that have, say, a 15-year mine life and they're in the lower half of the cost curve. So at Agentis, I've really focused on trying to identify and cover these type of companies because they move the needle for seniors to replace their reserves. So you've seen, look at Canadian Malartic getting a $3.6 billion bid, Detour Gold at 3.8. The Canadians' tier one assets have all been bought. So globally, there's not a lot in the current production playing field other than I think Lundin's there, Torex is there at that tier one status. I think K92 is on that trajectory down at Papua New Guinea, one we cover. So there's not a lot of opportunities. That means we're seeing a lot of pressure now come down to the developers. I know you've visited some recently. Skeena is going to be in the gun sights, even though they're set to build because they're cashed up. Artemis Gold, coveted again with tier one status, about to pour gold later this year, early next year, as prime takeover candidates if they choose to sell.
What about at the sort of bigger end of the wedge? Recent years, we've seen some of the bigger companies, their share prices, market capitalizations get dinged because things haven't gone to plan. I'm thinking of IM Gold, I'm thinking of New Gold, more recently B2 Gold. Do you consider these companies vulnerable?
Well, they are multi-asset companies, and that's part of the intermediate to senior mining company status. I would consider B2 Gold to be an intermediate, and that's what saved them, really. But when you have an issue that's not going away vis-a-vis political risk, say in Mali for B2 Gold, that hurts you. But they do have cash flow, and they do have good bench strength and ability to navigate this. But that's the downside of investing in certain jurisdictions. It's a tough game, and I think it's a balance between having enough assets and production to not have that bump in the night kill your share price, and also having not too many assets because you can really move the needle with one superior asset. Look at Alamos Gold bringing in Richmont, and that looking like 120,000 ounces per year. It's now their flagship asset, I would argue, on a trajectory 300,000 ounces per year. So it's rare for these mid-tiers to get a tier one asset, and it's set them up extremely well as kind of the go-to Canadian producer in terms of that mid-tier space.
You mentioned some of the single asset producers. They always have a certain level of risk because if anything does happen, they don't have that portfolio to fall back on. You mentioned Torex, you mentioned Artemis, you mentioned Lundin Gold. Does that create a tension where they perhaps do need to try and transact to get a second backstop asset or something of that nature?
Well, just to be clear, Artemis is not quite there because they're not through commercial production. But I think it depends on the shareholdings. I think, for example, Lundin Gold has the backing of the Lundin family. It's, we predict, and based on historic precedents, is that they probably will do something to diversify political risk and have multi-asset production platform. It remains to be seen, but we think that's a logical step. Torex seems to be comfortable with organic growth in Guerrero State, Mexico, and they may stay the course. That's our view, that as much as they probably should acquire something to de-risk, they may stay the course. But when you have a tier one asset, you want to be careful what you do because you don't want to dilute quality. So you want to be careful on the type of asset you may tuck in, whether it be a developer or another producer.
Looking at the sector overall, is there one M&A deal that you think is screaming to happen, that you would like to see happen, that you think is a no-brainer, that for some reason hasn't happened?
Well, that's a good question. I'm surprised there hasn't been more silver consolidation, specifically in Mexico, amongst some of the high-quality producers. Gatos is now being taken out by First Majestic. I used to cover Mag Silver. I always thought that was, one of the best deposits in terms of continuity and upside. Fresnillo partner, that a pure silver play could have been produced, and Silvercrest could be part of that conversation. That was one of the obvious ones I was thinking would be an outcome. And in terms of the single asset producers, it's interesting right now because there's none in Canada, the US, or Australia. I think there's one kind of in Australia, but you've got a landscape where it was risk on until 2012, and the whole world was seeing M&A of the single asset producers. From 2012 onward, it's been risk off. Almost all the M&A has been in Canada, with big outside M&A like Pretium and Detour and Canadian Malartic, Cisco. Now the cupboard's bare. So the question is, you mentioned Sentiment getting the bid this morning. That one was something I was waiting for. I wasn't sure because they did have organic growth where they stay as a proto mid-tier. But to answer your question in terms of an obvious one, Orla, I think, will continue to grow. I don't see a specific target for them per se. And then I would be surprised if K92 can execute and get to tier 1 status, that they do not get taken out by a number of the seniors.
Okay. We've covered a lot of ground, Michael,
Yes.
but how do you think the rest of the year will play out in the gold space?
Well, I think there's a couple things at play. If gold price stays relatively flat or slightly up post the U.S. election, I think M&A velocity is going to keep on increasing. I think that there is going to be a lot more capital available to fewer players who are getting really good exploration results, and I think that's going to drive them towards M&A faster. I think some of the developers now will get taken out fairly quickly because the seniors and intermediates know that it's kind of, there's a scarcity of good quality assets, and that if they want to buy something in a safe jurisdiction, they kind of have to act now. And so I think it's going to be a busy year M&A-wise till the end of the year. I think, and that's going to come down, hopefully, and be a cascading effect to the explorers that have interesting results, good management teams, and really need the support in this market.
Well, let's hope so. Michael Gray, thank you very much for joining us today.
That was great, Paul. Appreciate it.
I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.